Let's start with the truth that nobody outside of Alberta seems to understand. There is no Canadian real estate market. Every market is very different, and Calgary is holding up heading into 2026. If you only listen to the national headlines, you would think that real estate is suffering everywhere. You would think that affordability has hit a wall. You would think that rising interest rates have crushed demand. You would think that prices are falling coast to coast and that confidence is at rock bottom. And yes, some of that is true nationally, but Calgary is not a national story. Calgary is one of the exceptions. You can see it clearly when you compare the data. The national housing narrative for late 2025 was supposed to be simple. The Bank of Canada would cut rates, inflation would cool, and it would relieve pressure. But then the data flipped. We got a jobs report that shocked the bond market. We were expecting just an addition of 10,000 jobs, but we received over 54,000 jobs. That means unemployment dropped faster than it has in 2 decades. And that move sent fixed mortgage rates rising immediately. Higher for longer interest rates were not supposed to be the story, yet here we are. And even though we're seeing higher rates squeezing Ontario and BC buyers to the breaking point, they're barely denting Calgary's fundamentals. Because Calgary isn't over-leveraged like a lot of those other cities. We aren't priced at a dangerous multiple of income, even though it has come up. Calgary isn't dependent on speculative condo investors the way Toronto and Vancouver are. Now let's look at the second big headline, which is GDP. Canada posted a positive 2.6% GDP gain in Q3. On the surface, that looks incredible, but if you dig one layer deeper, you see that most of that growth came from imports falling, not production rising. Machinery and equipment imports dropped sharply, especially from oil and gas sector. That's not organic expansion, that's accounting math. And at the same time, final domestic demand actually declined. Household consumption fell for the first time outside the pandemic since 2009. Disposable income slowed, consumer confidence is sitting below levels during the financial crisis. This is not a booming economy, this is a conflicted one. And this is where Calgary separates itself from the rest of Canada. Even in that messy environment, Alberta posted a strong employment gains while Ontario and Quebec posted weak or negative full-time numbers. Alberta is one of the only provinces contributing positive momentum into the national equation. That matters because jobs drive confidence, and confidence drives buying decisions, and buying decisions, especially from outside the province, drive Calgary's long-term trajectory. And even though Calgary's active listings are up 28% year over year, that's a feature, not a flaw. Calgary needed inventory, buyers needed breathing room, and sellers needed normalization. And condos definitely needed a reality check. Inventory rising is not a sign of weakness, it's a sign of the market rebalancing after 2 of the tightest years in Calgary's history. But this is the real story. Calgary might be entering its most strategically important year in real estate over the past decade. Because 2026 is the year many of the national markets will still be correcting, still unwinding, still dealing with oversupply or falling rents or mortgage stress. Calgary's still going to feel some pain, but it's definitely going to be the beneficiary of that pain. Look east. Toronto's market is facing downward price reversions. Their MLS HPI or home price index has fallen for 12 straight months. Their prices are down 23% from their 2022 peak. Condo inventory in some segments is quietly shifting into the rental market because sellers can't get the prices that they want. And most importantly, power of sales listings jumped 51% year over year. And that's the highest that they've seen since 2015. That is not stability. That is forced selling entering the system. That's what happens when affordability collapses and carrying costs crush investors. Now looking west, Vancouver's inventory is up 14%. Detached homes are sitting with nearly 10 months of supply, a number that we have only seen during periods of major cooling like 2012 or 2018. Their rents are dropping, prices have fallen for 11 straight months. Court-ordered listings are up 86%. These aren't signals, these are patterns, and patterns tell the truth long before the headlines do. All right, if you've made it this far, you clearly are into this content, so do me a favor, hit the like button, helps more people see this, and if you want more straight to the point real estate insights without the fluff, make sure to subscribe. I drop videos like this often, very often. I'd actually drop it more if I had more subscribers, so thank you for subbing. So what does this all mean for Calgary? Well, it means that Calgary's entering 2026 not just in a stable market, but as maybe the most balanced major market in the country. Prices are stable, inventory has climbed modestly, demand still holding, migration strong, our economy's outperforming most of the country, and the construction's finally starting to see a rollover, but not a collapse. And when you combine strong fundamentals with national turbulence, you get something incredibly rare: a city that grows because other markets weaken. That dynamic will define Calgary's next cycle. And before you say, oh, you're a realtor, of course you're gonna say that, keep in mind that I've been calling for a strong condo correction for almost 2 years, and also the suburbs to correct for the past year. And we're finally starting to see it. I'm not here to hype up or pump on any markets. This is just pure data. Because real estate is not just about supply and demand, it's about psychology, migration patterns, confidence, expectations, and the forces that push people from one city to another. Force number 1 is national instability. When the national picture feels unstable, when rates rise unexpectedly, when GDP prints are confusing, when consumer confidence collapses, buyers don't stop buying. They reposition. They look for markets that feel safe, and right now, Calgary feels the safest among all large markets in Canada. Not because it's the cheapest, but because it's the most aligned with incomes, the most predictable, and the most balanced. Force number 2 is migration. Alberta has been absorbing interprovincial migration for the past 3 years straight, but 2026 will amplify this trend for one simple reason. People in Ontario and British Columbia don't just want affordability, they need it. You can't carry an $800,000 mortgage at today's rates without bleeding cash. You can't pay $3,000 a month for a one-bedroom condo and build a future. You can't ride out a correction in a city where rents are falling, prices are softening, and delinquencies are on the rise. But in Calgary, you can still buy a home on a normal middle-class income. That alone will bring thousands of more buyers into the province. Force number 3 is other markets correcting. Toronto and Vancouver can't escape the numbers. Months of supply is rising, listings are rising, delinquency rates are rising, prices are falling, investors are exiting, and the condo pre-sales are almost zero. These are not temporary trends. These are multi-year adjustments, and every year that those markets adjust, Calgary benefits. Because equity leaves those markets and flows to other cities that offer value, lifestyle, and long-term upside, and Calgary checks all 3 of those boxes. Force number 4 is affordability, and that's Calgary's superpower. There is no other major city in this country where you can combine quality of life, income growth, and homeownership opportunity the way that you can here. That affordability acts like a floor under the market. When rates rise nationally, Calgary bends, but it doesn't break. When confidence dips nationally, Calgary absorbs the shock. When other cities lose first-time buyer, Calgary gains them. This is why Calgary's price declines in late 2025 were so minimal. A 0.4% month-over-month dip is not a correction. That's a rounding error. That's seasonal fluctuation. That's what a market looks like when it starts catching its breath. And even condos, where the annual decline is the steepest since 2006, they're not crashing. They're just normalizing after an investor-heavy surge, and builders just kept building them. The investor layer needed to be reset, and this reset strengthens the entire foundation moving into 2026. Force number 5 is construction, and this is probably the most underrated dynamic of Calgary's 2026 outlook. Reports show that dwellings under construction in Calgary have now declined for 2 straight months. Single-family construction is down year over year, condo construction is down, rental completions are high but slowing, and the Edge Analytics report explicitly warns that Calgary might be in the danger zone for future resale supply. That's code for supply is peaking now and tightening is coming later. When supply tightens at the same time migration increases and first-time homebuyers enter the market, prices go up. Not explosively, but steady, predictably healthy. And this brings us to force number 6, which is first-time homebuyers returning. The Edge Analytics report calls us out directly. As affordability stabilizes and rates eventually soften, the first-time homebuyer segment is going to reemerge. And when they do, they're going to ignite the entire chain of real estate transactions. First-time buyer buys a condo. The seller buys a townhouse. That seller buys a detached home. That seller buys a luxury home. One first-time sale creates 2 or sometimes even 3 additional market movements. And Calgary is perfectly positioned for this cycle because it still offers a path to home ownership. These are the forces shaping 2026 for Calgary real estate. Not speculation, not hype, not blind optimism. Real fundamentals, real migration, real supply dynamics, and real affordability advantages. So what does this mean for 2026? Well, Everything that we've talked about so far leads to one conclusion. Calgary is moving into 2026 as one of the strongest, most resilient, and most opportunity-rich real estate markets in the country. Not the hottest, not the fastest growing, not the cheapest, but the most balanced, the most stable, and the most strategically positioned for long-term upside. Here's some predictions that I have for 2026. Prediction number 1, the first half of 2026 will feel very slow, but not weak. Sales are going to move sideways, inventory is going to stay elevated, prices will remain stable with small monthly fluctuations, buyers will definitely take their time, and there's going to be a lot of sellers that are going to need to price a lot more competitively than they're priced now. But stability is not stagnation. Stability is a platform for the next cycle. Prediction number 2, the second half of 2026 is definitely going to tighten. Construction is slowing, future supply is shrinking, migration will keep rising, and once those rate cut expectations move back into focus, even modestly, you're going to see a wave of first-time home buyers come back into the market, and that's where the momentum is going to return. Prediction number 3, Calgary's condo market will bottom within the next year, and then we're going to begin that slow climb back up. Investors from Toronto and Vancouver who are bleeding money in their local markets are definitely going to be looking at Calgary for positive cash flow. Prediction number 4, detached single-family homes will outperform every other segment. Single-family construction is on the decline. Migration still going up. Families are relocating from Ontario and BC and want detached homes. They want space, they want value and stability. This demand will push detached home prices up faster than condos, townhomes, semis. Prediction number 5, Calgary will outperform every other large market on price stability and year-end appreciation. Toronto and Vancouver will likely continue correcting and staying flat through most of 2026. Edmonton will perform well, but it lacks Calgary's national draw. Montreal is going to remain steady, but not competitive with Alberta's migration. Calgary becomes the middle-class magnet, the family magnet, the investor magnet, the business magnet. And for my last prediction, prediction 6, by the end of 2026, Calgary will be recognized nationally as the strongest real estate market in Canada. Not the trendiest or the flashiest, the strongest. The one that didn't break during rate shocks, the one that maintained affordability when the rest of the country couldn't, the one that attracted migration instead of losing it, the one that saw stable prices while others reset, the one that built the foundation for the next expansion cycle. Calgary's next decade begins in 2026, and it's not because prices are going to explode, but because confidence is finally returning. Because in 2026, we're going to see the national story shift from where is Canada struggling to where is Canada growing. The answer is going to be Calgary. If you're a buyer, 2026 is a window. If you're a seller, 2026 is positioning. And if you're an investor, it's going to be time to accumulate. And if you're already a homeowner, 2026 is going to be validation. Calgary's fundamentals aren't just good, they're aligned. And when fundamentals align with migration, affordability, supply tightness, and national instability, you don't get a crash, you get a cycle turning upward.